Let's finally talk about the seemingly anticipated 2022 housing market crash. I swear it feels like skeptics have been talking about a market crash for the last 3 to 4 years, but today seems like it's getting closer than ever. So let's get into it. Hey everybody, my name is Lillian Chukwueze. If you're new to my channel, welcome to the family. Every week I drop videos about real estate marketing strategies and just real estate overall. So if that interests you, all I ask is that you please go ahead and like the video and subscribe to the channel and hit that notification bell so you know when I drop the next video. So the housing market is shifting. We all know that. I mean, there's a record high home prices have pushed the average mortgage payment up more than $500 per month, which is a 37% jump since the start of 2022. Now we know the last major recession was in 2008. Now, I just want to quickly talk about what the definition of a market recession actually is. So technically, a recession is a significant decline in economic activity for the last 2 consecutive quarters as reflected by the GDP. At least that's what it used to be. Now, the National Bureau of Economic Research, which is the entity that officially declares recessions, defines it as a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale and retail sales. So basically, if the economy is in a downtrend for a couple months to a couple years. But it's important to note that recessions are actually considered an unavoidable part of the business cycle, and it's actually a regular occurrence in the nation's economy, or in any nation's economy. So just like there's ups and downs in life, everything ebbs and flows, so a recession is actually nothing to freak out over. So I just want to give you guys a quick breakdown of the 2008 recession for all the youngsters on my channel who don't know what actually happened. So 2008 was the subprime market crisis, and this meant that banks were giving out a ridiculous number of loans to homeowners that they knew could not afford the mortgages. And these were predatory loans. So basically these banks knew that these buyers who they were giving loans to were going to end up losing their houses, most likely due to foreclosure. Now, for those of you who don't know what foreclosure is, basically when a homeowner is not able to afford the payments on their home anymore and they become upside down on their mortgage, which means that they owe more on their mortgage than what the home is actually worth. So for example, if your home is worth $200,000 and you owe $230,000, then you're technically underwater and you might have to go through either a short sale or a foreclosure, which is one of the most damaging things that you can go through as a homeowner when it comes to your credit and your financial situation. So foreclosure basically is a legal process where the house essentially ends up back with the bank that the homeowner got the loan originally from. So you can kind of see the cycle of people buying homes, not affording it, going into foreclosure, banks taking it back, and that cycle continuing throughout 2007 to pretty much 2009. And to be honest, I'm not really sure what the banks were thinking, but they clearly weren't thinking at all because they didn't understand the repercussions of this, even though it's morally wrong. And it's important to know that banks actually do not like to foreclose on homes because they end up losing money in the process, because to foreclose is actually kind of expensive. Banks are in the business of lending money and not owning homes, so they actually don't want the homes back. They would prefer for you to actually keep the home, keep the loan, and continue to make your payments. But during 2008, this is when millions of Americans saw the value of their homes significantly decrease, and many went through that foreclosure process. Now, quick pause guys here. If you're getting any value from this video or if you like it, go ahead and hit that like button and subscribe to the channel. Now, new home building activity actually never recovers since its heights pre-2008, so the housing supply is still very low. And in 2005, actually, new construction residential homes were at a high of about 2 million units compared to 1.6 million units in 2021. After 2008, builders barely built any homes for years, and it was found that the US was short nearly 4 million homes according to a 2022 Freddie Mac analysis. And this is why there has been such low inventory in the past couple years, and the low inventory was really emphasized during the last 2 years. However, what we are seeing now still doesn't compare to what we experienced in 2008. Pretty much what we're seeing now is more of a rebalancing or correction. As I continue to say, I don't think it's going to be a crash the same way it was in 2008, because the reasoning of the correction now in 2022 is very different than the reasoning of the recession in 2008. Now, the demand for housing has been so strong over the past few years and the supply has been so low that it was only a matter of time before we started to see the market tilt. Right? So sellers have had the utmost advantage because they have a plethora of offers and buyers to choose from, when they're selling their homes. So sellers have kind of been on a high for the last couple of years. And this is a huge contribution as to why homes were closing at such high sale prices that were over market value, because buyers became desperate and offered more than what the homes were actually worth. The national median home price was pushed to more than $400,000 in May 2021, which is up 14.8% from 2021. That's a huge increase, and that's the highest on record according to the National Association of Realtors. Basically, prices are up 45% since the pandemic began in March 2020, which is ridiculous. But as I mentioned before, it was only a matter of time before the market began to correct itself, which is basically what we're seeing now. So according to NARA, which is the National Association of Realtors, sales fell for the 4th straight month in May to 8.6% from over a year ago. And as one of the lead analysts at Housing Wire said, we don't have a bubble, we just have an unhealthy home price growth, which is true. Now, as you guys can see, the demand is cooling off, and it allows buyers a better opportunity to buy houses at fair prices, or at least the current market value. So for those buyers who have been in the market for the past couple months to a year and haven't been able to win on any homes, now is your chance. When it comes to mortgage rates, yes, they are still up, but buyers also have to think about being able to win on the house that they want now and then refinance in the next 6 to 12 months to get a lower rate and a lower payment, because it is expected that rates will drop. Now, obviously, I don't have a crystal ball and I can't tell the future, but that's just what experts anticipate. But as I said before, I don't think this current correction will mimic the magnitude of the recession in 2008. This correction has been highly anticipated because the recent pace of home appreciation was clearly unsustainable over the long term. That's pretty obvious, but it doesn't mean that everything will take a huge dive and crash significantly. So markets will start to see a decline, but they will most likely be small and healthy for a market that has seen such a crazy increase over the last few years. So that's my take on it. Whether you agree or disagree, let me know in the comments below. We can discuss a little bit more. But that's all I have to say about what's going on in the market right now, guys. And if you did like this video or you found it valuable, go ahead and give it a like and subscribe to my channel. Follow me on Instagram and TikTok. And until next time, I'll see you guys on the next one. Stay safe and stay blessed.